Hello friends, warm welcome to my channel. If you are new to this channel, please don't forget to subscribe to my channel and keep supporting me as you have always done. Well friends, in today's video we will be discussing something about the fundamental and fair value calculation, and today's company that we have selected is the largest public sector bank of India, that is State Bank of India. Well friends, the reason why I have picked up this topic or this particular bank today is because SBI touched its 52-week level today. So 52-week low level means over the past 365 days, over the past 1 year, this is the lowest price that SBI Bank touched today, and it went down to like 160 rupees. So we will try to analyze as per the sales and earning per shares entities taken into account, and we'll try to analyze whether the price at which the bank is trading at point of time is the right price to make a new position, to hold this position, to average your position, or is it the right time to sell off your position. So we'll discuss something about the fundamental aspects of the bank. So let's quickly jump into those fundamentals. So friends, if you look into the fundamentals, the total market cap of SBI standing as of last financial year is 1,47,657 crores, whereas the reserves is 2,33,603 crores. There is a reason behind this. Often you will see that for banks there would be a lot of cash reserves, but that doesn't mean that that cash is actually the operating like cash of the bank, because most of the business for banks and NBFCs depends upon the loan percentages. So if a company is having 100,000 crores in its bank account, it means that the company can use that fund whenever they want. But for banks, 100,000 crore in the account means that is their potential of giving that as a loan to other uh, financial institutes or other companies, where from they can actually make profit out of the interest they charge. So reserves in terms of banks is a bit tricky. It's not exactly the amount that they can freely use it for their own development. So earning per share, if you look at it, is 15.8. Dividend, SBI has not given dividend for a very long time now. Sales is also not that lucrative. So if you look into the last 5 years, SBI has given like almost 6.03% return. Promoter holding, again, because it is a nationalized bank, it's a government owned bank, that's why most of the stakeholding, that is almost 57%, is with the government. If we look into the all-time graph of SBI, so you will see that SBI has been like always a turbulent movement, up, down, up, down, up, down, up, down. It's like a zigzag movement always. But again, over the period of time, we will see that even though it is a zigzag movement, it has given an exponential return. But because of this corona and because of this overall crisis that we have, we can see a lot of corrections here. So from almost 380 390 price, it has actually corrected to 162, and today when I'm recording this video, today it has touched actually the lowest price of the last 1 year. If we look into the fundamental analysis, after fundamental analysis, let's quickly look into the fair value, or we can say the intrinsic value of SBI, or what's the fair value at which it should be trading. So taking into account Benjamin Graham's formula, we are looking into the earning per share, which is 15.8. The growth I've taken 5 years, 6.03, and the bond yield standing today is 5.673. As per this intrinsic value, we can see that intrinsic value is coming around 251 rupees, whereas the current market price, it's trading at 165. Though from the low it has actually recovered to 78 rupees. So considering that the closing price is somewhere around 165 166, but again the intrinsic value is coming around 250 rupees, so we can see that there is always a huge margin of like almost 45% a growth which the company can travel, because as per fair value it's coming around 250 rupees. But considering the market condition and the overall scenario of the banks not actually operating in 100% of their bandwidth, this crisis is going to continue, and definitely what I see is this low 52-week low is like going to break further, and it can go further down. But again, if you are a new investor and you're looking for a long-term view, definitely the price that you're getting today is a very lucrative price. And I'm sure if uh, you are making a position in this particular bank at this price, you will not lose anything. And once this pandemic situation is over and market starts recovering again, so these banks and NBFCs are the ones which is actually going to um, jump by exponential levels. So definitely it's a very good time that you make your positions into. If you're already holding positions, make sure you average your positions, and if you are new, then definitely it's a gold for you to put it in your portfolio. So friends, I'd like to conclude this video saying that it's a very good buying opportunity, but definitely just don't go and buy stocks. Do some your own homework on it and do some research and analysis on this particular stock. Make sure you talk to your financial advisor and then take a decision, because when you put your money, it's your hard-earned money, and this is something, if you are losing it, it's a loss for you. So friends, I hope you have liked this content, and if you have liked this, please do subscribe to my channel and keep encouraging me as you have always done. And I'll be back with something important and some more analysis on other companies as soon as possible. Thank you so much. Have a good day.